Alright, gang, it's your boy Nature, aka Nature. I already know what time it is, gang. So we just went over uptrend, we just went over downtrend. So the next trend we be to do is the sideways trend, which is um considered, consolidating. It's just going sideways. So I want y'all to understand all three trends, even though I went over the trends already. So this is sideways trend. Look at some images real fast. So sideways trend. So we got an uptrend, higher highs, higher lows, downtrend. So we got lower highs and lower lows, and sideways trend is just going sideways. You feel me? Sideways trend. Um, so some more examples of a sideways trend on the market. Sideways trend, it's not an uptrend, it's not a downtrend. We don't trade on sideways trends. We don't trade when the market is going sideways. Okay, it's consolidating. You know what I mean? It's not really doing nothing. It's just going sideways, up and down. It's not really, you know what I mean, moving anywhere. So more examples of a sideways trend. So boom, boom, sideways trend right here. See, what's a downtrend? Now it's just going sideways. When it goes sideways for like a long time after, you'll see like a sideways trend usually after a strong uptrend or downtrend. When you see a sideways trend after a strong uptrend or downtrend, it usually means that, sideways trend usually means that it's building up momentum. So it's building up momentum sideways to see if it's going to continue going down or it's going to go back up. So that's what sideways means. It like really means like it's just building up. Like, see some more examples. Boom, this is an uptrend. Boom, this is a downtrend. This right here considered a sideways trend. The one to the right, it's not really going up or down. That's the first two pictures. First one going up, obviously you can see it. And the second one obviously going down. Third one is you don't know if it's going up or down. So when you can't see the trend clearly and see if it's a clear uptrend or a clear downtrend, and you don't know which is going on, it's probably a sideways trend. So we don't trade on sideways trends. All right. We wait to see what it wants to do after it breaks out of the sideways trend. After it breaks out of that trend, that sideways trend, we want to see what to do after that. That's when we get in. But like I said, I wanted to show y'all some examples. I can go on an example of Audi versus Japanese. Yeah. Boom, it's going sideways. See, it went down, then it went back up. Then it went down, then went back up. It went down, then went back up. Then went back down, then went back up. But it ain't go nowhere. It stayed in the same rate. It stayed in the same range. The red box and the blue box. Then it go out of the blue box and then go out the red box. That's another way you can tell. Now once it break out of the red box or break out of the blue box, then you know which way it's going, up or down. So for this example, the red box will be for the uptrend, and the down box will be for the blue trend, which is this is a good example. So sideways trend is a horizontal price movement that occurs when the forces of supplies and demand are nearly equal. This typically occurs during a period of consolidation before price continues to prior trend or reversal in a new direction, in a new trend. A sideways price trend is also commonly known as a horizontal trend. Let's look on the definition. What is sideways trend? Sideways trend is known as a horizontal trend. The sideways trend is the horizontal price momentum that occurs when the force of a supply and demand are nearly equal. This typically occurs during a period of consolidation, also called sideways trend, before price continues in a prior trend or reverse in a new trend. So consolidation, you can also say correction, is going to go through a period of correction before it decides if we want to go up or down. So sideways price trend is also commonly known as a horizontal trend. Key takeaways: sideways trend is horizontal price movement of stocks between resistance and support levels that occur when the forces of supply and demand are balanced. Traders can profit from sideways trends in several ways, from looking for confirmation or breakouts or breakdowns to using stock options to placing stock orders when the price near resistance level. We don't trade say trends, up and down trends. We don't really trade sideways trends at all. That's the easiest way that I was taught from my mentors, that you can lose all your money. So we're not. But I want you to understand, because you're gonna see this and you're gonna think it's going up. You're gonna think it's an uptrend or a downtrend. Really, just going sideways. You gotta really zoom out of it and look at it. That's why I show y'all some examples so you can see, like, oh, it's not really doing nothing. It's just going up and down. It's not really moving. You know what I'm saying? So a sideways trend is generally the result of a price traveling between a strong level of support and resistance. Not uncommon to see a horizontal trend dominate the price action of a specific asset for a prolonged period before starting a new trend higher or lower. So yeah, it's not common if you're gonna see it consolidating, like, you know what I'm saying, for a good period of time, just building up momentum. That's another thing that consolidation do, builds up momentum before actually starting a new trend, higher or lower. So these periods of consolidation are often needed during prolonged trends, as it is nearly impossible for such large prices moves to sustain themselves over the longer term. So, as it's nearly impossible for such large price moves to sustain themselves over larger terms. So it's temporary. Every correction, every consolidation is temporary. You know what I'm saying? But, like, it's building up momentum, as I can really say, to see. So you just pay attention. Why it might be consolidating for a day, it might be consolidating for, like, 2 days. You know what I'm saying? Or, like, the good half of the day before it decides that it wants to. You know what I'm saying? So just pay attention to it. Volume is a more important trading indicator. Most remain flat during a sideways trend because it's equally balanced between sellers, bulls, between buyers and bears. Bulls will be buyers and bears will be sellers, between buyers and sellers. So it shoots up or shoots down sharply in one direction and then breaks out or breaks down and expects to occur. When analyzing a sideways trend, traders should look at other technical indicators and chart patterns to provide an indicator of where price may be heading, and when you see a breakout or a breakdown may be likely to occur. So you see a breakout is going up, you see a breakdown is going down. So you see after consolidation, you see a breakout is breaking out, is breaking up, or you see a breakdown is breaking down. So that's how you can tell if a breakdown after a consolidation period is going down. Most likely, if a break up after a consolidation period is going up. So profiting from a sideways trend. There are many different ways to profit from sideways trends depending on their characteristics. Typically, traders will look for confirmation of a breakout or a breakdown in their form of either technical indicators or chart patterns, or seek to capitalize on sideways price momentum itself using a variety of different strategies. Like, you know what I'm saying? We don't, like they say, we can capitalize off of it, but I don't teach that. I teach to trade off of trends, uptrends and downtrends, and not to trade off of sideways trends. So many traders focus on identifying horizontal price channels that contain sideways trends. If the price has regularly rebounded from support and resistance levels, traders may try to buy the security when the price is nearing the support level and sell when the price is nearing the resistance level. Your stop loss level may be put in place just above or below these levels in case of a breakout occurs. So, you know what I'm saying? It's going to bounce off of the support and resistance level a few times before it actually breaks that resistance level or breaks that support level. If it breaks the resistance level, resistance means up, support means down. So if it breaks the support level, that it finally breaks that support level, it's going down. It finally breaks that resistance level, it's going up. And you just push your stop loss. If it broke the support level, stop loss is above. If it broke the resistance level, stop loss is below. So advanced traders may also use stock options to profit from sideways price momentum. For example, straddlers or stringers can be used by optional traders that predict that the price will remain with a certain range. However, it's important to note that these options may lose all their value if the stock moves beyond these bounds making strategy riskier than buying and selling stocks. Like I said, we trade forex, we trade currency pairs. Um, I don't really trade stocks, but I like Bitcoin and stuff, stocks too. But I trade currency pairs. So, example of a sideways trend. The chart below depicts a sideways trend following a strong downtrend after that lasts several months. So this was a strong downtrend that lasts several months from May. You can see June, July, August. Then it starts slowing up in like August, September, and it's been consolidating ever since. And it looks like around February it wants to start going back down. But it will be for like months and days, or sometimes uptrends before like days and months. It's just not going to go up. It's going to make higher highs and higher lows and stuff like that. It's going to make a lot of corrections. I just want you to get used to this, because you're like, okay, it's going up, but no, it's really just going. It's a sideways trend, as you can see right here. After this major downtrend, you can see it's not really doing nothing. This is a lot of ways like new beginner traders lose a lot of their money because they think it's going up, and it's not. They think it's going down. It's not. It's just going up and down. It's a sideways trend. So be aware of that. So that was that example of a sideways trend. It was going downways. It was a downtrend because look at the moving average. The moving average, the candlesticks are below the moving average. They're below the blue line. So that means that it's going down. If the candlesticks were above the blue line, then that means it will be going up. And as you can see right now, the line is it's just staying in the middle. It's not really doing nothing. Meaning that it's not really doing nothing. So you can see clearly how it was a downtrend because all the candlesticks are below the moving average. So I taught you on the last video and what is the downtrend about the moving average. I'm gonna also do it about it. Alright, so that's it for inches up on the sideways trend. So I can be familiar with that. So yeah, this is a sideways trend. This is an example of a sideways trend in this picture after a strong downtrend that had lasted for several months. In this case, traders may interpret that the downward trend slope day was 200-day moving average. It had a 200-day moving average on there, and indicating a long-term downtrend, while the sideways 50-day moving average suggests that the indicated term trend is sideways. The trend, they had two moving average on there. They had the 200-day moving average that indicated a long-term trend. As you can see, the black line is that 200 moving average, and then they also had a 50-day moving average. My moving averages are a little different. I'm gonna show you all my numbers of my moving averages and stuff. There's all types of ways you could use this and suggest that the immediate term trend is sideways. So on a 50-day moving average. So the trend could indicate that the stock is consolidating before resuming in a downtrend, or perhaps preparing to reversal in a bullish trend. So it's going sideways, building up momentum, and then we need some type of confirmation, some type of candlestick, some type of triple candlestick pattern, double candlestick pattern, something just to know that it's going to reverse. We look at the news, tradingview.com. So that's really a sideways trend. Right here from August to February, you can see it. It's just going sideways. It's not really doing nothing. Alright, gang, so that's a sideways trend. You see a sideways trend on the market, don't trade it. Wait until the sideways trend is over, wait till the correction is over. Let it correct itself, let it go through what it's going to go through. And like for this instance, it's on a down. It's been going down, and then it's making a major correction. It's building up momentum. So and change directions or go back down. So we have to wait for that confirmation. Alright, so I just wanted to let y'all know that I see a lot of like beginners make mistakes like that. I made a lot of mistakes like that. I thought it was an uptrend or a downtrend, and it was really just a sideways trend. It was just consolidating. It was just going sideways, So this is a sideways trend. Alright, gang. Boy Nature, aka Nature. Gang.